changed the name of Twitter to X. Yep. Yep. And because somebody has an account that's called X, and once he changed the name, that account went from like 0 followers to 26,000. And so Elon's offering him money for the account. This is I follow the guy Kai because he trades too. He's a great trader. Dude, that guy Kai is so fucking funny. Ah, let's fucking follow that guy. Comments just get crazy Anyways, I'm gonna start this. I'm gonna start the prompt. I love Twitter. Alright guys, let's go ahead and get this started. And I just saw the funniest post. Oh, honestly, like, it's not even the posts that are funny. It's the comments that people make that make the freaking jokes so much funnier. It's like I rarely just laugh at a post, but I'm mainly laughing at the comments that people make. It is so freaking funny. All right. Good morning, brother. Good morning. All right, guys. So, just real quick, I'm gonna go ahead and get this screen up for us. Man, I'm super happy to be here today. And let's just dive right into the charts, okay? So, let me make this a little bit bigger, or a little bit smaller, I guess. Boom. A little bigger. Trying to find that medium sweet spot. All right, cool. All right, cool. All right, guys. So, I am currently in a trade. I am currently in these Dow longs. I'll break it down to you guys fully. But basically, I am long for the whole day, and I'll give you guys where that bias came from. All right. Now, DXY does not look like to me that it's gonna go down as of yet. Okay. So the only reason that I am break even on this trade already is because the DXY is really not complementing this trade at all. Not just that, usually I'd like to add on to my trades, but so things have to align all the time. If they don't align, they don't deserve your entire risk. Now, most individuals have like a trade to trade risk parameter, right? And so when you have like a trade to trade risk parameter, I don't know about you guys, but I usually take about 2 trades per setup, 2 or 3 trades per setup. Okay. And I take about 2 setups a week. So if I'm taking about 2 to 3 trades per setup, does every single trade or does every single setup deserve my full amount of risk, or all two or three of the trades that I usually tend to put on? And this is a great example as to when I will not add on to the positions. Okay, so I am in from the low. Unless we go back down or even lower, I'm not adding on to this position. And the reason being because DXY is not complementing this whole bias. Okay. Now, am I just not going to take the trade because DXY is going long? No, of course. I'm still going to take the trades. These assets still are independent and they'll still go in the direction that they need to go to. Okay. I believe everything's already predetermined. And so when the DXY complements, though, you'll see movements being a little bit more erratic. But to be honest, guys, Dow has been going long all week, and so has DXY. So for me to say, okay, Dow won't go long today because DXY is going long is a little bit too big of a claim. All right, a little bit too big of an expectation. All right. So just kind of watch price action, watch the assets, see if the correlation's true, because not always will it be very accurate. Okay. Now, what does this mean though? For you, the trader, or for us, the trader, that means that there is lower probabilities on our end. There's a lower probability of this trade playing out on our end. All right. And since there's a lower probability, it doesn't make sense to add on to the trade when one of our supporting confirmations is giving us zero support, right? Matter of fact, it's giving us a confirmation to be cautious in the market. Okay, so when DXY and indices are moving in the same direction, be cautious. That's when I don't just look for re-entries and to look for like positioning myself one more time. Okay, so take note of that. And let's dive right into it. And again, this is why I'm break even. This is why I'm break even, because of the DXY. Okay, because I don't believe that this is the high of the week. I believe we can go a little bit higher in terms of DXY. So let's start here actually. Okay, you know, this accumulation is starting to look very, very nice, right? Because we got another 6 days left, another trading week left within this monthly candle. Within the weekly time frame, we have this previous area of distribution, but just be aware, you know, for me at least, being aware of the fact that we already took out the equal lows. We came into a monthly imbalance, almost close to the entirety of it. We accumulated on the daily. And so for me, actually, this previous area of distribution does get my attention as a target. Okay, so now for me, actually looking at this whole push down, I really want to see this whole area get taken out. Like that whole area highlighted in red, I want to see price action trade through that. Now, of course, like if you're looking at this whole range, you can't just say like, oh, just because you want a high, like that's where you're going to be aiming for. You have to be technical with it. Do your measurement, okay? 50% or above is all we need to have to validate a retracement. Okay, so if we're still looking at this now in a bearish perspective because we're bearish on the weekly, okay, then we have to look at this whole range. 50% or above is the 50% is the first target. Then you have this right here, this candle opening. Okay, for me that is a area that gets my attention, and next area is that high. Okay, so we still have ways before we get down there. So here's that on a daily perspective. So now looking at the daily range, which is still bearish, we're still 50%. Okay, we just arrived at 50% today, okay, of this daily range. Now if we're looking at this daily range, that target is still the same, and that high still gets my attention, right? And eventually I'm looking at this double top. But as of now, you have to just go piece by piece. What are we gonna, if we're going to go for this low for this candle. What do we hit on the way there? Well, we hit this previous daily opening gap. We hit this previous daily high, and we're going to hit this imbalance. Cool. Like, we have all these intermediate targets that we're going to hit prior to getting to our overall objective, right? So it's about having this long-term objective, this long-term thinking, but also setting yourself like an action plan of what needs to be hit on the way to your higher time frame. You can't just have a higher time frame objective and then expect to know what you're doing on the 15-minute or below. It's not going to happen in that order. So I've been looking at longs this week. As you guys can see, price action has been immediately rebalancing since. So you can see the high here. We push higher. And sometimes it looks like we're going to just leave an imbalance behind. But really what happens, like this right here, right? But really what happens is we get these immediate rebalancing prices. Okay, one happened right here. And one happened right here. Okay, so after we open the very next day, so this is a 3 candle play, okay, just like an imbalance is. Instead of leaving that gap or that imbalance, that fair value gap, what we do is we come all the way down to the previous high, close that imbalance, rebalance price delivery, and then continue going. And notice we did this throughout this range. We did it once, twice, 3 times, right? So as price has been rebalancing and delivering these rebalanced price actions, we've just been moving towards this previous daily opening gap. I don't think, like I said, I don't think that this is the high of the week, but for me at least, this probably is the high of the day. If we do move any higher, I don't think we'll go much beyond this imbalance here on the left-hand side. I believe price is going to struggle to get to this previous daily opening gap. And, well, I guess we did get that push, that rejection down. We're still overall bullish. So, again, looking for overall longs still to hold out price. Will we see another Monday low or high of the week? I don't think so. I think we're going to reject lower at some point. But it could definitely take place. Monday could definitely end up being the low of the week if I'm looking for more longs. Okay, it just depends what happens on a very, very critical day. All right, there's a very, very critical day coming. Can you guys guess what that day is? What is that very critical day coming that would keep me from setting up another weekly objective? What is another event that's taking place this week? There's that imbalance, by the way. Again, I'm not playing it. I will not be playing this. Just gonna leave it. Yes, FOMC. Thank you for saying that. Yes, FOMC. FOMC is coming up. All right. And because FOMC is coming up, a couple of things get my attention. All right. First, this previous area of distribution. This whole thing right here, 50% or above that high. Like, this candle does get my attention, but this imbalance up here gets my attention very, very much. Okay. That high right there, which is also a previous weekly high. That gets my attention very much. And the other, if we're looking at, so now we got to look at both sides of the spectrum, okay? We got this, that's in premium. And then we have this, that's in discount, okay? So, these are the 2 zones in which I feel this week we're going to stay within, okay? These are the 2 points in price in which I feel we're going to stay within when it comes to FOMC. I know it's a fat ass range and everything, but if we start trading, if we start looking for more longs, again, I agree with the longs 100%, okay? But I just don't agree with continuing to go long from this point. I believe that we need to come lower to continue to go long. So this is where my overall bias is. my overall standpoint. I'm bullish. My weekly perspective is bullish. And I would like to see some longs from FOMC out of this imbalance. Again, doesn't have to come all the way down here. This is a hell of a long way from where price action. Like, price action can literally just come back to this imbalance tomorrow and then just fly, right? But as of right now, I need to see a little bit deeper into discount before we can go back into premium and taking out this high. Okay. So we're going to let price action do its thing. I really want to see a nice rejection here. Given a nice rejection here, let's say we break on the 4 hour, then this whole projection to the upside goes out the window. But until that 4 hour breaks, I'm bullish. Okay, so for me, bullishness until that 4 hour breaks. All right. We're going to start looking at bonds here pretty soon. The 10-year bond. Here pretty soon, we're going to be looking at the bonds market. Okay, if bonds go down, DXY should go up. But I'm going to study this a lot more before I even start teaching it to you guys. A lot more. So for now, we're just going to dive into our beautiful prices here. All right. A quick question for you guys on the chat. Do you guys trade news? And if you do trade news, what's your favorite news? And if you do not trade news, if you try to avoid news overall, why? I'd really like to know this whole subject, about this whole subject. It's very interesting to me because everyone has such a different plan when it comes to news. Mine used to be I don't trade news, and I used to avoid news, period. Because I used to trade with FTMO, and FTMO did not allow like major news trading. Okay, I don't know how they are now. I haven't been with them in years, but that's how it was when I first started with FTMO. And I'm talking about 2 years ago. Okay, so my question to you guys, if you trade news, which one's your favorite? And if you do not trade news, why do you avoid news? NFP and FOMC are my favorite 2-stage events. Wait for the 30-minute, then the real move happens. Nice. NFP, I do like that one a lot because it's like NFP, and then we get the after effect during the open, and it gives a really good reaction. I couldn't agree more with you. And then FOMC, of course, you have that initial volatility hit, and then 30 minutes later you get a really good entry point. So I 100% agree with those. Beautiful, cool. So Nasdaq's been struggling to go higher after we hit that high here. We hit that on Monday, and note that DXY has been bullish. So therefore, Nasdaq's been struggling to move higher. Okay, but we are in this weekly imbalance here on Nasdaq. Okay, then looking at this whole weekly range, I'm looking at it this way. Okay, this whole weekly range, we could take out 1, this low. 2, we can come take out this low, which is 50% or below. And you can only see it on the daily. You don't see it on the weekly, okay? But overall, I am bullish on Nasdaq. I do think that because DXY is pumping to the upside and has been pumping to the upside for a while, Nasdaq will struggle to get to this point. But my overall attention for Nasdaq is to get to this imbalance here and then look for shorts. I'd love to see Nasdaq get in there and then look for shorts. I am still looking at the low of the week, which was set on Monday, and this low over here. I'm set on bearishness being long term, but as of right now, intermediately, we need to get to a previous area of distribution that's going to give us enough resistance to move price action down to another level of support. Love volatility on news, but it's pretty risky. 100%. 100% agreed. Pretty risky. That's why I like, honestly, I've developed over the time. I've developed enough data. I guess not developed, but I've acquired enough data where I feel comfortable jumping in front of a trade before news hit, depending on the news. But it's just, honestly, it takes, just a couple years to gather all this data. You can't just jump into news and think that it's going to be volatile. Like today, I can't tell you how many people today told me at 10 a.m., hey, watch out, red folders on 10 a.m. Hey, watch out, red folders at 10 a.m. But I guarantee you, all the people that were warning other people about the 10 a.m. news have no idea, or have no data showing you or proving to you that you actually need to be cautious during these news events. They just see a red folder and then assume that it's going to be a crazy morning. Honestly, did you guys see volatility this morning at the 10 a.m. news? Did we see volatility that we could not handle at the 10 a.m. news this morning? Well, let's go to it. Magic boxes are doing their thing. Again, still not adding risk. Let's see where 10 a.m. is. 10 a.m. right here. Does that honestly look crazy to you guys? And it's just, again, we'll go to gold if you want. But to be honest, if we're gonna bring up gold as of news, you gotta understand, gold does this shit right here, this type of stuff right here. Gold does that type of stuff even when there's no news. And I can personally tell you from my students that even when there's zero fucking news, gold will do some shit like that. So, to me, gold is a different beast. Okay, I do believe that, gold gets hit really hard when we do have news, but personally, gold moves hard all the time. Yeah, I'm looking at gold longs here. These longs are gonna pop off. Or we'll see what ends up happening, but this is the last line of bearishness here. If we trade above and close above that, we're going back up into this imbalance. If we continue to respect this, we're going to go short into this imbalance. Pretty straightforward on gold. But again, gold for me is volatile all the time. Or can be volatile all the time. Okay? I'll walk you guys through this trade here in a little bit. Let's finish NASDAQ. So again, it's data and experience. The trading is a recollection of experiences. Okay, successful trading is a recollection of experiences, in my eyes. Okay, and that doesn't mean that you can't be successful without having experience. As you guys have seen and probably experienced yourself within your first year trading, you can experience wins even without a substantial amount of experience. Okay, which is what brings all these like gamblers into trading. But honestly, all I would tell you guys and ask you to do yourselves this favor and start documenting everything. Like, stop claiming things in your head. Stop labeling things negatively in your head. Alright? Matthew told me this a really long time ago, and it changed my life. He asked me to avoid saying the following phrase: I don't like price action. I don't like this price action. Okay? He would hear me tell, like, this is what friends are for. Truly. Okay? He would hear me say that statement. He would hear that statement maybe every week with me. Okay? And most of the time I had zero data to prove that why I didn't like price. I just didn't understand it well enough, was my problem. But I didn't know that, and I could never find that out if it wasn't for somebody telling me, not to label things a certain way. Like, for example, 10 a.m. news, just because we see a red folder, labeling it as a volatile folder or a volatile news event, right? When there's zero, most individuals have zero data to back that statement up. So in trading, I will ask you guys, back up your narrative. Your narrative should be derived from a recollection of data, not from what you feel like is going to do today or what we feel price action is going to do. I feel like that statement, I feel, should be taken out of trading. If your statement says, I feel like, it's going to be too volatile, remove that statement. Just know that there's emotional thinking behind that statement. Okay? Yeah, price action is taking its sweet ass time. So again, this is why I'm at break even. And I did take my trade on the 15-minute. I don't see a 15-minute imbalance created as of yet, so I'm going to leave my stop loss in the same place. But if I do see a 15-minute insufficiency created here soon, I will be moving my stop loss to break even. Up into profit, below wherever that imbalance is. But nothing yet. Anyways, so NASDAQ yesterday fucking clapped me and then went my way. Okay, so yesterday we were looking at previous daily highs, and even in these highs right here. Okay, we were looking at some potential targets, areas to target for our longs. Okay, and so when we were here yesterday, the longs, after we swept that previous daily low, everything was really bearish except the 5-minute kept giving these like reaccumulations. So first accumulation, give me 1 second. My wife is gonna leave. 1 sec. Heading out. Love you. All right, so first thing that brought my attention to NASDAQ being the low of the day, it was 1, previous daily low, the liquidity sweep. 2, the imbalance created to the downside, and then the imbalance that was created again to the upside. This range right here is what I call a balanced price range, and it should not go below it. And so yesterday I got clapped, I believe, on the first long out of it and the second long out of it. Okay, and price action just kept coming back to my entry, taking me out, to my stop loss, and taking me out. It ended up going our direction just way later on in the day, right? Ended up going our direction. Some nice NASDAQ shorts right now. Wow. Look at that. DXY melting down as NASDAQ is melting down. It doesn't make sense to me. So that's why, again, when the assets are not in correlation with DXY, I like to be a little bit more cautious in those days. Have I made money when DXY is not cooperating? 100%. I've hit take profit a bunch of times when price action is not correlating. But it's those days that kind of fake you to believe that you can continue to do that in a sustainable manner, and in reality, it's not sustainable. Okay, I'm actually going to move my stop loss here below this order block just a little bit more in profit in case we do come down. I want to secure something for today, at least $100. See how I have little risk in here. If we hit take profit, it would give me maybe 1%, if that. Right, very little risk there, because for the most part my risk goes in here. on the reentry. But given that today's just not on the most attractive day to be adding on risk, I won't be adding on there, given the DXY. So yeah, I know I've said that like 3, 4, 5 times already, but I just really want that to be clear. 1 hour still bearish. Created some equal highs up there. The 1 hour. Really, really interesting. Let's see how much the 4 hour has left. The 4 hour still has another 3 hours left before it closes. 4 hours still has another 3 hours before it closes. I'm going to be leaving this trade alone until that. Just letting it do its thing. Right? Because, again, I just want to see. I want to stay secure the profit or some break even at least. But I also want to let this trade play out because given that I'm trading within an environment that's less probabilistic, I want to be able to retrieve as much data as I can from this trade. And let's say like I prematurely closed it. I can't tell you how many times I prematurely closed the trade and just kicked myself in the balls for it. Like really just put myself down for taking or closing out a winning trade. And that's like as far as these trades would go. Like I wouldn't go more in depth into them because again, it's like I just took a losing trade or blah, blah, blah. And for XYZ reason, you know, I took a winning trade that I closed in a losing manner, you know, and that can really be a downer in your trading or in your confidence. But just kind of just letting it breathe, letting it go, allowing it to do what it does. Being like, again, if I were to lose this trade, and it would hit to stop loss, being 100% okay with the level of risk that you have on the table is taking small trades like this is 100% the way to build your confidence. I promise you, if you can't hang on to a small ass trade, honestly, you're not going small enough. That's all I gotta say. Okay? Whatever you guys think your risk should be, just half it. For the next week, half it. Let me know how your trading goes. Let me know how much easier you trade. Share with me on Twitter, Instagram, your experience after just cutting your risk in half. Are you more impatient? Are you more patient? Are you able to let go of the trade and let it ride? Are you still closing out trades? Let me know. Are you over trading because now you're risking a lot less? Let me know. Everyone's so different. I've had and encountered students that when they risk less, they lose more. And you're like, well, how can you lose more if you're risking less? It's because they're taking more trades of these smaller percentages. I'll tell you guys a really big fact here in case you guys, this falls under your category. If you've ever lowered your risk because you're trading, you're being too aggressive, and then you lowered your risk but you're still taking the same amount of trades, all you're doing is careless trading. Okay? Carelessly taking trades. I'm sorry to be so blunt with it, but that it is what it is, and it's just my opinion. Okay? To me, if you lower your risk, a lot of people view this as an opportunity to take more trades because they don't value the volume behind their trade. And if you do not value the trade that you did put on, the risk that you did put on, if you do not value it, you will only look to increment its value by adding more money to it. And more money means more risk means more exposure means more headaches. It's a paradox that I see a lot of people stuck in for years. Like, people can spend fucking years in this stage. I'm here to just give you guys a wake-up call. If that hits you, here's your wake-up call. Don't wait please don't wait till the next person, like till months from now, somebody else talks to you about this and then it hits you again. Like, run with this feeling. If it did hit you, run with this feeling. Take action on it. Okay? If you ever learned something on this call, set an action plan right away. Write that thing down that you learned. Boom. Not taking trades before 10 a.m. Okay, cool. What's my action plan to that goal? Okay, you know what? Instead of showing up at 9 a.m. Eastern, I'm going to start showing up at 9:30 a.m. Eastern. And so forth. Like, there's got to be an action plan to follow through these lectures. If there's anything that I've ever mentioned to you guys, please, action plan. Follow through with it. Okay? Dow has been long very nicely. Peep the 1 hour on Dow. There's London close. Look at that. Look at that. On Dow. So beautiful. Just been long and since. There's that 9 a.m. candle. We did end up closing on this like bearish counter trend. So if we end up dumping, we have our stop losses. If we end up running, we have our take profit. Okay. But right now, yeah, that imbalance still gets my attention. I feel like we could come back to that imbalance one more time and just continue going long. So I'm just going to leave the stop loss there. I'm going to let price action do its thing. And I'm also going to give you guys, these few minutes. If you guys have any questions, any comments, any observations, this is the time, place, space to do it. Aren't you guys happy? For those of you who were here yesterday, aren't you guys happy we called it quits after those longs? Like, if we would have just kept going, let's say we would have tried another one after that. Yeah, no. We just would have came and hit us out. So, no, I'm really happy that we called it quits on that. DXY just melting from that previous daily high point. I mean, previous daily opening gap. Okay, sorry. Just the ICT has quite a way with his words. Previous daily opening gap. There we go. We are from a previous daily opening gap to another previous daily opening gap. Right there, a new day opening gap, I guess. And honestly, I can see us going long from there. So here soon, I want to close this, but I want to see an imbalance first on either like the 15-minute, 30-minute, an imbalance, something. And then I'm going to put my stop loss right below that imbalance, and I'm going to leave it. Let's see. Let's go over Euro USD, because I have a lot of students that look at Euro USD, and I love Forex assets. Yes, this is kind of what I've been waiting for. I want to see us distribute from here. I want to see lower price action. Start taking out the lows. I want to see all this fucking trend line get taken out, honestly. I think this right here is on the way to do all that. Oh shit. Yeah, the way that we swept this previous daily high. Look at this. Okay, I was looking at this yesterday and I'm like, wow, look how beautiful this is. And I'm glad that we went over this, because I can't wait to show you. So 4 hour. Okay, cool. So we're looking at we're looking at Dow, DXY and Euro. Okay, now look at this. Okay, so that's the high of Friday the 21st. Where's Friday the 21st is right here. So Friday is right here. Boom. DXY creates a higher low. Okay. And Euro takes out that high. Okay, that bearish divergence there was so clean to continue going short. I thought it was beautiful. If you guys ever see a high or previous daily high, previous weekly low, all these, and you guys don't see it on DXY, that's divergence right there. And I would learn how to manage my trades in those areas. But all right, guys, if you guys don't have any questions, comments, or observations, I am going to wrap up the call right there. Again, thank you guys for being here. I will see you guys more than likely. We'll be reviewing FOMC price action on Friday. Again, I'm pretty long overall. Like if we're still looking at all of these, I'm still pretty long on everything. So, except Nas. Okay, Nas. I want to see these shorts out of Nas from this area. Okay, I don't see that same area on Dow or S&P, but on Nasdaq, I do like the shorts out of this area. So maybe Nasdaq is taking its time getting up there, just waiting for Dow and S&P to start giving that distribution point. So again, it's still pretty bullish overall for the week, but I'm anticipating weakness to enter the market. Meaning I'm anticipating price action to begin, or this current bullish trend to begin to weaken. And we should start seeing some reversals here soon. So we'll see what ends up playing out overall. Just being cautious of price action, not trying to pick the tops or the bottoms, letting price action tell you what to do. But yeah, guys, besides that, thank you again. The indicator on the right, it is called the higher time frame power of 3 by 2 degrees right here. He is an absolute GOAT when it comes to indicators. He only creates smart money concepts indicators. That's his niche. Only smart money indicators, and it's pretty cool. I probably talk about him every week, which is awesome. I'm glad that you guys ask. It's my favorite indicator ever. I've never used an indicator that I've loved so much. So, favorite indicator. Anyways, guys, again, thank you guys for tuning in week after week. I will see you guys on Friday for our market mentorship overview. We'll review the entire week, all news and everything. And yeah, guys, I want you guys to clap easy, trade responsibly. If you don't know about news tomorrow, trade cautiously, but trade smart, okay? Don't just participate or just watch without documenting every experience that you're having. Because then that's how you learn. You learn from your experiences that you create. So with that, guys, create the best of experiences this week. Be responsible with the experiences that you do create. And, you know, I'm here if you guys ever need anything. You guys can reach me through the link on the description below. And yeah, guys, take care. Clap easy and trade responsibly. Peace.